I mean, there is a lot that can be done now in Ukraine because there is, the eastern southern part, which is occupied and in a very, where there's very no activity, very little economic activity, which is really the war, part of the country. But otherwise, there is a high degree of uncertainty, and recent events showed that, the country is fully in war, and there are risks of bombing, and this creates a huge degree of uncertainty. But there is still 80% or more of the territory which is functioning with the country, which is working, and government functioning, private sector business doing business, and so forth. So our support is really targeting to support the real economy and make sure that key infrastructure such as railway company can still function, electricity, gas company have liquidity needed in order to buy gas and to have electricity system functioning, and support to the private sector. With the banking system, we financed a lot of companies in the agribusiness and pharmaceutical. We are also start to support the municipality. So there is a lot of things we can do. We have already invested this year, despite the war situation, more than 1 billion or around 1 billion, and we will do more by the end of the year. We can do that because we receive a lot of donor support to share the risk with us. Because of course, for an institution like a bank, investing in a country in such a challenging situation bears some risk, and it's very important for us to have the capacity to have donor support to absorb part of this risk. But we can, and we will continue to do that. I think, for example, now there will be a need for additional investment to restore what has been destroyed a few days ago in terms of the electricity network and possibly also railway network.
And just a final question, really. Are your expectations as to the situation many of your client countries find themselves in, are they deteriorating at this stage, would you say?
Overall, you mean? Yes, what we see...
Because of a combination of high inflation and tighter monetary conditions.
Yes, we see the situation, our activity, and it's been, the need for institutions like EBRD and our additionality compared with private sector players is much bigger than it was last year. When it was very strong with COVID, but then in normal times you have a lot of, in countries in which our activity is very targeted to some specific areas. Now the need to have investors, long-term investors, more able to take some risk with a sort of counter-cyclical component is much higher than it used to be. And the risk appetite of international investors for our countries of operation, all the countries neighboring Ukraine, for example, is lower. So these are challenging conditions. You also have, of course, the impact of the tightening of monetary policy, depreciation of currencies compared to dollar and so forth. This creates an environment which is not very positive for emerging countries in particular.